Good day. Welcome to the Tax Answers Advisor with Marcelino Dodge, enrolled agent. We're up to show number 53. Appreciate the worldwide audience and being across many platforms as well, like iHeartRadio and Apple Podcasts. We will be also loading a video later of this program up onto our YouTube page. So certainly we appreciate all the visits there and appreciate for you to be able to subscribe to our channel. We invite all of our listeners to a future mutual exploration session where we examine tax planning and year-round services that we offer, because we want to keep you out of trouble, which is what my guest Eric does, is help get you out of trouble today. We want to keep you even from needing Eric's services, but this is still an important topic we're going to talk about today. So we're here to help you to pay as little tax as possible. Always reach out to me, success@cashtracksfinancial.com, or give me a call, 844-394-4287. And please visit my brand new website, cashtracksfinancial.com. Today, we're going to move on. We talked about this a few months back about IRS enforcement, but things have updated and changed a little bit then in the last several months. That's why I'm calling this Letters and Collections Are Moving Quickly. And that's why I'm having Eric Green, an attorney, once again visit me today, because this is a very important topic. And if you're a little bit behind or owe some back taxes, Eric is the man that can help you. He's a partner in Green Sklarz LLC, a boutique tax firm, main with offices Connecticut and New York, practicing in civil and criminal tax representation before the Department of Justice, Tax Division, the IRS, and state departments of revenue. He lectures on tax topics, including with the Insightful Accountant, CCH, NAEA, NATP, and other societies. He served as an adjunct faculty at the Connecticut Law School and also as an author and lecturer of the CCH IRS Representation Certificate Program. He founded the Tax Rep LLC, which coaches accountants and attorneys and enrolled agents like myself on building their own representative practices, and has a great weekly podcast called the Tax Rep Network podcast. And certainly, as well as the author of The Accountant's Guide to IRS Collections. And I could go on and on about Eric here, but he's just a great man and a great guest here. And we really appreciate you joining us again, Eric. So how you been doing lately?
Doing great. Busy, very busy, but busy is good. It beats the alternative.
Oh yeah, definitely beats the alternative there. So I think there's still kind of, you may know this a little bit, have more handle on this than I do, but it seems to me that there's still some people that think because everything's running slow with the IRS and letters are taking forever, and you're taking forever even to get non-enforcement actions done, that maybe the IRS really isn't doing much when it comes to going and collecting back taxes though. So what have you been seeing happening?
Well, they flipped the switch on the automated levy program June 15th. So in August, we began seeing the first wave of the automated levies come out. So we've been very busy. What we now know is January 3rd, Monday, January 3rd, trust fund assessments are going to go out against employers who haven't paid their payroll taxes. So the government has sort of been holding off because of COVID and other stuff. In June, again, levy program, lien program, the automated switch was flipped. But for payroll taxes, there's personal responsibility for the owners and the officers who don't, who fail to see that those payroll taxes are properly accounted and paid over. It's called the trust fund recovery penalty. If you're interested, it's under code section 6672. It is a penalty applied to the responsible individuals. They've held off on that. They have told me on my podcast, January 3rd, all bets are off. They've been given the green light by the commissioner, and they briefed Congress and got the green light from Congress. So they're going to start moving forward on the trust fund assessment. So I think in about a week, we're going to get a lot busier.
Mm-hmm. Yes. Now, something aside from that, because something that I wasn't very big on back during COVID and actually advised my clients against it, was the allowance when they said, well, you could not pay all of your your payroll taxes in 20 or 21 or whatever the time period was. Cause I advised my clients against doing that.
Right.
And so do you see some issues arising with the people having to now get caught up on some of these payroll taxes they didn't pay because the government had said you can delay paying them?
Yeah, well, the issue with there was the deferral under the CARES Act. You could defer your 20 payroll taxes and pay half of it back in 21 and balance in 22. The gambit was that employers, things would come back. So 2021 would be back to normal. Let's just get through this 2020 COVID situation. It'll go away by then. And, then you'll start paying it back. Well, the IRS told me 2021, they have already identified a lot of employers that have not been making any of those deposits. And so the decision was made to wait till January 2022, because now they'll know if you're in violation. Because theoretically, half gets paid in 2021. It doesn't have to be evenly. You could do it all on the 31st. Right. There could be some massive deposits that are made Friday that, now people are caught up. But if that doesn't happen by Monday, they're going to unleash on those folks. So companies that are struggling, I think, are going to get pushed over the edge. And for those people that are behind, the best advice I would give you is to literally reach out to the government and try to start, you can work out a deal. You might be uncollectible. You can do an offer and compromise, even on an open company, even on payroll taxes. You can do an offer and compromise. So if you're in a business that has been seemingly permanently damaged from the economic impact of the coronavirus, the best advice is to be proactive. Don't wait for it to get assigned to a revenue officer to come knock on your door, because usually by then they're not in the mood to cut you some slack. They're there to try to collect. So I think that now would be a good time to meet with your professional, reach out to the IRS, submit a financial, start working out an arrangement, and that could arrangement to be, I can't pay. It's perfectly okay to be uncollectible, but the burden is on you to go to the government and show them that.
Yes, definitely. Those are all the issues I wanted my clients to avoid. So, and all of them.
If you could pay, why defer?
Yeah.
We advise same thing. And when people call, say, what do you think? I'm like, can you pay it? Oh yeah, we can pay it. Well, then pay it. I would not defer, because I don't know what's going to happen in a year. I don't know how long this is going to last. For businesses that struggle, my advice is pay the payroll tax, pay the sales tax. Right. I know bankruptcy lawyers that can screw everybody else, but you can't go bankrupt on payroll tax and sales tax. There are some states where they won't compromise on the sales tax. Some states like Connecticut don't have any statute of limitations. So if you get behind with payroll tax or sales tax, you could end up dying owing that money 50 years from now. So Connecticut is brutal. So my best advice is pay the payroll and pay the sales tax, and the rest can be dealt with. If you are behind in payroll and sales tax, you can deal with it, but I would recommend aggressively dealing with it.
Well, it's interesting you mentioned about maybe a lot of deposits coming in on Friday. I'm wondering, or I'm scared actually, because I've had some problems for the first time this year with EFTPS making a payment through the system. This is the first year I've had a problem doing that, and I'm wondering if people do make a lot of payments or schedule them, could the system crash on Saturday if there's on this week if that does happen? Because I had a payment for a federal payment that the IRS said they never got, but I had the receipt from EFTPS saying they got it. They had it, confirmation number and everything.
And it left your bank, and it left the bank, right?
The weird part about it is it didn't leave the bank, but I had the confirmation that it was supposed to. It was weird.
Well, I think one of the silver linings, if there is one for coronavirus, is, the IRS right now or at least prior to coronavirus, you couldn't do a Zoom or WebEx or any of that. There was no virtual.
Mhm.
They would not allow you to send them memory sticks with documents. They had to be hard copy.
Mhm.
They will only allow you to e-file the last couple of years. Why? I could e-file 5 years ago. Why don't they just leave that open? Because they can't handle the mail and they can't handle these late returns being filed and get them processed. If there's a silver lining to this, I think it's really pointed out the structural issues for a virtual IRS.
Mhm.
And the feedback I'm getting informally is they are starting to rethink how they do all this stuff.
Mhm.
For instance, why do they have to mail me however many gazillion notices I got in the mail? Why can't I have a version of a Dropbox and they just put it in there? I
Mhm.
mean, I know they're probably keeping the post office afloat, but why don't they just leave e-file open, constantly back, even for the late returns? Yeah, it'll be late. So what? Why can't we e-file it? Things like that, because they always have, oh, you got to go in hard copy. Well, now they can't process it.
Mhm.
So I have clients that we can't do an offer. They haven't opened the mail. They can't get into compliance. It's a nightmare. And they know it's a nightmare. I mean, the official statements are they're opening all the mail. They are more than happy to admit they're opening, wink, wink, nod, nod. They're tearing open the envelope. That they're doing. They're just not doing anything with the contents.
Mhm.
So it's really kind of
Yeah.
it's creating a lot of headaches.
Well, that relates back to something that Nina Olson and I talked about a few months ago about the customer service problem that the IRS has. And the reason I think about this is because part of what we're talking about here, opening the mail, is that if they had enough funding to fund the customer service area, make it easier for people to pay their taxes, people would probably pay their taxes. But yet they're always talking about, and even in the bill that they're talking about increasing enforcement. And it's like, well, wait a minute. If you help people pay their taxes, wouldn't it be better to help people to provide better service with that?
Yeah, well, you know what? I am all in favor of increasing enforcement, but it has to be well thought out. There is, I think, there's a little bit of fraud on the brain going on over at the IRS. Everyone is involved with fraud. Everything is criminal. And on the one hand, for people like me, it's nice. They're generating a lot of work, but it doesn't feel like they're focusing where they should be.
Mhm.
And I agree with you. If you can make compliance easier, and just let the people who want to comply. I've been urging them to keep some of these changes they made. So for the audience who may not be, up on this, during COVID, they came out with IR 2020-248. And what it did, it made it much easier for taxpayers that wanted to pay their taxes to pay their taxes. So for instance, you could always call up and just set up a 4-month payment plan. You didn't have to submit financials. It's called a short-term payment plan, 4 months. They extended that to 6 months. The automated installment agreement that you could do right over the phone without a financial used to be 100,000 over 84 months, 100,000 or less, or going over 84 months. They increased that to 250,000 over the time remaining on the collection statute. It's been great. We can just call up, set up payment plans, and the taxpayer is done and out the door. They're not spending a lot of money on us. We're not submitting financial packages. The whole thing is not going super slow. And to their credit, they're looking at all this. They've told me they are pulling the numbers. They want to see, how is this working? Is it really beneficial? I'm hopeful that stuff will remain. And I think that if you can let people who want to pay just pay, and who want to file just file,
Mhm.
I would not do anything to discourage that. And now you can focus your enforcement people where they're needed. The
Mhm.
high income earners that can't be bothered to file. All of the things that, TIG to flag, which are the real abuses of 50 million taxpayers in trouble.
Mhm.
Maybe you've got 1/5 that fall into that bucket. So maybe you're looking at 20%. The rest are people who are struggling.
Mhm.
And, I think to the extent we can get people, make it easier for them, an on-ramp in to set up an agreement or prove that they're uncollectible and do all of those things, it's just better for everyone. And the government wastes less resources chasing them.
Mhm. Yeah, making it easier definitely be fabulous, especially now, even that you tell the taxpayer, well, here's a phone number to call the IRS, and sometime, and that's actually, I should say, over 50% of the time, you don't even get somebody, or you get a hang up or courtesy hang up. I think that's what they call it. But
They call
anyway,
it a courtesy hang up. Congratulations, we're going to hang up on you.
yeah.
I
So,
mean,
so anyway, it's just getting to that point, getting them to understand that, yeah, there are, I like you mentioned there, like about the 10 million who you should go after. You got these other ones who do want to pay, who want to get it caught up and make it easier for them to pay, work with them to get it done, and then move on to these other ones and get to the ones that are probably more being evasive when it comes to these taxes there. You mentioned on a previous about how Chuck Reddig is really a law and order guy. And so he's not going to let this really slide anymore.
and no, I mean, and that attitude, I think you're seeing filter down. They're much more aggressive criminally. Um, they're getting much more aggressive in the collections area. Um, to Chuck's credit, I mean, I think that overall that's good, but they really, what the pandemic kind of did, they were already weak in customer service. I think the pandemic and the remote working and everything else had sort of pulled the blanket off of that, and it's now very open that
Mhm.
the government's got real problems. They got staffing issues. They need 600 more people to just process the mail.
Oh.
Literally to take what they ripped open and
Mhm.
do something with it. And so the it's we need more bodies
Mhm.
in just the processing areas. Because that's the big frustration is you can send something in, you have
Mhm.
no idea where it is.
Yes.
And I know that it was very impolitic, but the taxpayer advocate came out and said, don't call us about the unopened mail. There's nothing we can do about it. And at the first I read it, I'm like, that's a great attitude. But then I thought, and you think about it, I'm like, well, I kind of get that. There's, so where is my thing? I don't know. It's
Mhm.
in Kansas City, sitting in one of 5,000 bins. It's really it is problematic.
Mhm.
It's exacerbating a lot of problems. But and I will tell you, so from the takeaway, I think for the professionals and taxpayers too, if given the current situation where they're not opening the mail, everyone is working remotely. The IRS, they're just like us. They're working at home. They have childcare coverage issues. They're terrified of school shutdown, the lockdowns, and the kids being home. I mean, they live in the same world we do. So here's what my advice to my tax rep members, which has always been this way, but I think is very timely now. Whatever you're doing with the government, and I mean this across the board, it doesn't matter. It could be submitting documents in response to an audit notice. It can be appeals. the appeals hearing. It can be an offer and compromise. It can be in a spouse, doesn't matter. When you submit documents to be reviewed, keep in mind who you're dealing with. Again, working remotely, they don't have easy access to physical files. And I bring this up, Marcelino, because I've had some accounts where they want us to take over the tax court case. Well, what happened at appeals? They wanted these documents. We gave them to the auditor. I'm like, well, did you resend them to the appeals officer? That's not our problem. We gave them to the auditor. I got news for you. It's your problem, right? And what I've been advising our members to do is, look, here's my advice. If you want a good outcome, this isn't about being right or wrong. If you want a good outcome, whatever you want that appeals officer to see, or that offer specialist to see, or the innocent spouse investigator to see, had better be in that package. I had a senior partner who's now deceased, but he told me years and years and years ago, Eric, the goal when you go to appeals, and it's not just appeals, it could be at any one of these areas. The goal is to make their agreeing with you easy. So you want to do your write-up so they can literally, he said, sometimes I'll go, when you do a FOIA later, he said, what I wrote up is actually, they just verbatim took it and used it in their decision. They have all the documents they need in front of them. Don't think that they're going to go start looking for something you gave to the auditor. Maybe they will, maybe they won't. Again, think about it. They're off-site. It's not easy access. They're trying to do the best they can. So today, more than ever, when you're dealing with the person on the other side, give them everything you need. So I'll give you an example. In the offer and compromise realm, what we're seeing a lot of now, you need to be in compliance to do an offer, which means you filed at least the last 6 years of returns. So there are people that are calling, we mailed in the 17 return, and we then mailed in our offer. They returned the offer because we're not in compliance. And here's why. No one's done anything with the 17 return. It's sitting off somewhere. Here's what we're doing. Let's say you file some missing returns, or I make up some estimated tax payments to get into compliance. When we submit the package, in the cover letter, I'll say, the taxpayers filed the missing 2017 return. We're not sure if it will be processed yet, so we've enclosed a signed copy of it in the package for you. Okay, the estimated tax payments, we have copies of them online that we made in the package for you. The stuff we gave to the offer specialist, now because now we're at appeals, here are copies of what we provided. Now, should I have to do that? No. And yes, it's a waste of a little bit of paper, but here's what I can tell you. It's easier for them when they're overwhelmed to say, oh, you're not in compliance, goodbye. Return it, and now I have to have a fight to try to get it reinstated. Just give it to them. Yeah, I mean, just give it to them. But if the package, whatever it is these days, exam, appeal, whatever, make sure you send every piece of paper you want them to see, and don't be afraid to make it dummy proof. So if you're a CPA, you'll know what I'm talking about immediately because you've done public accounting. But if you're an EA or an attorney or just a taxpayer listening to this, the financial form, like in an offer, it's a 433. With an audit, it would be the auditor's letter with their IDR, their information document request. That's your lead sheet. Behind it, we tab Exhibit A, B, C, D, and it's all tabbed behind it. Could I just send it in a 3-inch stack of crap? Of course I could. What's the likelihood that they're going to flip through, miss something, not recognize something for what it is? Give them everything, make it dummy proof. And I'm harping on this because today it's more important than ever because you're dealing with, again, remote work from an IRS that has never been exactly the most motivated and driven body of employees. And for them, they may be willing to go find stuff. They just can't get to it because they can't physically get into the office. They don't know where the file is. It's a bit of a mess. So the greatest advice I think right now for anyone dealing with the government, if you can do something online, do it online. If you're going to be sending paperwork, if you can fax it directly to them, do that. Don't mail it, because if you mail it, they have to wait for a day that they can get access to the office and get in and do it. And lastly, whatever you're trying to do with them, make sure you get, even if it's redundant, give them everything they need at that moment to make the decision in your favor.
Mhm. So basically, if you've given it to one officer, make sure you got another copy for someone else. That way, basically you got, okay, here's the copy for you. And then, oh, wait a minute, we got to go over here now. Well, here's a complete copy over here for you, because basically, like some of the IRS computer systems, they don't necessarily talk to each other.
Right. No, and you can get to somebody who is going to help you, or I mean, I've had this where appeals officer retired in the middle of the appeal.
Oh my.
Now we get assigned to somebody else, and that person's like, okay, what's going on? It's a lot easier if I can say, walk them through verbally, here's what happened. Let me send you the package, and I can send the correspondence over to them. So we have a document management system. So everything we send is electronically there.
Mhm.
So if Eric never comes in again, my law partner can go in on this case and see, okay, I can see what's happened. This is what he sent, review it, and literally pick up and carry on. You certainly want to keep copies of whatever you send. These days, do not send anything that is not certified. You need to prove you sent it, because Lord knows they're not going to open it and do anything with it anytime soon. You really have to think strategically to cover yourself. I have to prove I sent it in, like you said, the EFTPS confirmation. Now, the money didn't go, so it really wasn't paid. But if they want to hit you for penalties, you can say, oh, yeah, excuse me, no. Right? We tried, your system is screwed up. We're happy to, we'll make the payment, fix it, but we're not paying the penalties. Right? I mean, you kind of just, I think if you can embrace the fact that the government is struggling with this, and consider that when you're dealing with them and responding, you're going to get to a much better, happier outcome.
Well, and it's kind of always the way, I mean, I've tried to do it anyway myself, and trying to just think about, let's just make it as easy for them as possible to get the result that we want.
Right.
Even if we have to, as you say, as you mentioned, make it dummy proof, just point out each little item here as to what's enclosed. This is what it's for, in addition to just in general, trying to make sure that it's done there. Now, part of this too, now you talked about this other part here one time on one of your podcasts, and I just wanted to see how's this fitting in? Is this part mainly when it comes to audits, when like the auditor, I'm guessing, because I guess it would be the auditor that would like ask for like QuickBooks files, electronic files for a business. Is that mainly in an audit when that comes in?
Yeah, I generally don't have revenue officers in the collection arena asking for that stuff. They generally will ask, and the reason they want the electronic file, I mean, honestly, they want the audit trail. They want to see the adjusting entries that were made, with the idea that would kind of, tip them off to something going on. And by the way, they're entitled to it. I mean, if you look at the revenue procedures, revenue rulings, the code, the regs, they're entitled to all paper as well as electronic files that support the numbers on the return. So first of all, you want to look at that stuff, right? I mean, if you're handling the audit, you go in and look at the audit trail and see if there's something there to be concerned about. I mean, we don't necessarily have to pick a fight over nothing.
Yeah.
I tend to, pick my battles, not make everything a battle. So certainly they're going to ask for that. There is a way, and I am not a QuickBooks expert. My understanding is there is a way to do a period copy. So if you just do an accountant's backup, it's all the way back to day one, everything. But you can create this period copy, which is the same thing, but only for the select period. I've had the IRS come back and say, you basically meddled with the file. And we said, no, we didn't. We gave you a period copy. That's all you're entitled to. They can threaten to summons and everything, the full blown set. They've never done it. I think because they know they have the information that the summons could be quashed. But anyway, for when it comes to the QuickBooks file, they are going to ask for the electronic file, and that's why they want us to go through and see the adjustments. And again, that's a step that the practitioner, who the representative, should take and just see what you always want to see what the auditor is going to see. You go in and back when they would actually do the physical visit, the home office, you go to the home office, and by the way, bring a measuring tape. You have to go see in advance what the auditor is going to see. You never want to be surprised or just wing it and hope it all works out in the morning.
Yeah. And I think that's what some taxpayers don't understand accurately, is that, yes, they can have those electronic files. Now, I actually encountered this at another time, as far as being told that I haven't had a client that happened to me personally yet, where they've asked for a QuickBooks file, but it's come up in education classes in the past. And there was an attorney that did a class, and I went to in Vegas one time, and this was one of the subjects about these files. And because QuickBooks is the most common one out there, he says, well, yeah, you got to give them to them. Even if it's whatever software it is, you got to give it to them. Now, if it's a certain software that's not QuickBooks, you don't have to tell them how to read it. You just got to give them the file. And I was like, okay, well, that makes sense then. If I don't have to tell them how to read it, they may not be able to read the data, because many of them are probably trained on QuickBooks, is what I'm imagining.
Well, they have in-house supposed experts who do this, but it would be an argument for, say, there's a third-party service bench. They will do your bookkeeping and send you spreadsheets. You can't get the software. It's proprietary to them. So I've had this where the auditors say, we want the backup. There is no backup. It's not our software. It's a third-party vendor, and here are our reports. And the auditors don't like that, but so there is an argument for that. Plus, most people screw up their own QuickBooks. But anyway,
yeah.
So, not that we don't love the work, but
yeah. So back on to about notices of deficiencies. Have you been seeing those picking up the last few months?
There was a slew of them at the beginning of the year. We're still getting them. And these are generally the non-filers. What happens is the government, if it has enough third-party information, under Code Section 6020, will create a substitute for return. And when they do that, they issue a notice of deficiency. And we had a ton of them at the beginning of the year. I've probably seen 4 or 5 in the last month. So yeah, no, the government's still going against the non-filers.
Yes, that's excellent. And we appreciate that. Now, another thought I was thinking about here is, do you anticipate maybe some of these notices, or maybe more of these notices, or maybe you've had some of these notices in regards to cryptocurrency transactions?
Oh yeah, well, so the government is making far greater use of data than they ever have before. And one of the big sources of data is from the John Doe summonses on Coinbase, Kraken, and Circle. So if you've been watching the social media feed of CI, they are seizing cryptocurrency left and right. And I was literally on the phone with Hank Key, who's the director of field enforcement. And Hank told me that he's getting all annoyed. He's like, everyone's talking about criminal. He's like, we seize just as much, if not more, than they do. And what they're doing is they get the third-party information from the John Doe summons. So now they know who owns it. And they're taking that data and they're running it against anyone who's filed an offer in the last 2 years, anyone who has requested to be uncollectible, anyone who filed bankruptcy where the IRS was a listed creditor. And they're comparing to see, did they report the cryptocurrency that we know they own? And the referrals, unofficially, the referrals from civil over to criminal are up 42%.
Wow.
Yeah, you file a false 433. You didn't disclose an asset. because, my law partner will tell you, if you live in the US, the only reason to have cryptocurrency is money laundering or gambling. I mean, there's nothing backing it up. Anything you can do with crypto, you can do with real money. So why would anyone, I mean, I understand like third world countries, why it's useful. I mean, where the banking system is not something that you trust and all that. And so, there's the government is really pursuing the cryptocurrency hard. Foreign assets, same thing. They got all the information from FATCA. They're doing the same thing. They have a database of that. They're looking at anyone who's done an offer to see if they've disclosed these foreign assets that they have. So yeah, no, I mean, collection cases do go criminal.
And that's why I once again reminded my listeners just last week, in fact, when I did this program, the fact that, did you know if you're dealing in cryptocurrency, this is an IRS reportable event? Because so many people are using, you got places where you can go buy coffee, they'll take a cryptocurrency transaction, or various other businesses and some large corporations that are accepting cryptocurrency for stuff.
Yeah, I mean, it's effectively, it's a security. So it's no different than walking into the coffee shop and paying with IBM stock. You have a realization event. You effectively sold it for the cash that you used to pay for the coffee. So yeah, I mean, you have effectively a scheduled, I believe, a Schedule D gain or loss, I guess theoretically. No, it's but again, if you ask my law partner, you ask the commissioner, well, why are these people in it? Why wouldn't you just have cash, right? And so there's a bias at the government, of course, is that you have this for a reason, right? And it's usually because you think it's going to be unreported. And that's not true. And there are people that just, I mean, when I first heard about this, I thought the whole thing was stupid. Cryptocurrency, virtual currency. And so I never put any money into it because I was like, the dumbest thing I've ever heard of my entire life. The blockchain technology, I will tell you, is amazing. The blockchain technology is very impressive. What's going to really become of cryptocurrency, it's a little unclear to me, but the government's view is it's certainly a security. It's a reportable event if you use it to pay for something or sell it. And on the return, on the 1040, on a 433 in collection, you have to disclose that you own it.
Yeah, and hopefully people will start realizing they need to disclose that because it, as already sounds like, there's some cases where it's gone back to criminal because they failed to report it in some instances with offers and compromise and those kind of areas. And it's just so important. As well as one of my other education classes, they talked about the cryptocurrency and how, as a tax professional on my end, that's at least something I need to be talking to my clients about, and asking the question. In fact, that's why the question is on the 1040, is to ask it. So that's something I need to be asking them, because they could be thinking, well, I just bought it and this kind of thing, or maybe they may have just bought it, which is not necessarily a bad thing. Is when they go to sell it, that could end up causing them problems or issues, depending how much they're selling, when they're selling it, and all this kind of stuff, or if it's short-term or long-term. So we're just working at really at least I'm working to educate people, at least let them know that, you got to be aware of this. And I'm sure somewhere in your stuff, you got a question about that as well.
In our checklist of documents that we send out for an offer or any of that, do you have cryptocurrency is a yes, no question. Do you have foreign assets is a yes, no question. It can't be left blank. Because, it's on the form. It's got to be completed. And what my concern, of course, is, we submit it, special agents show up in my office and say, what happened here? You don't know they have crypto, you don't know they have, Bitcoin. And I want to be able to pull out and say, well, they said, no, we didn't know they had Bitcoin. Because what clients will do later is say, well, I'm sure I told you about that, try to blame us. Yeah, no, you didn't.
Yes. As they say, they'll always throw the professional under the bus.
Absolutely.
So that's why, like my own engagement letter is literally like it's almost like fine print. I mean, it's like 3 pages with all kind covering foreign assets. I think it has cryptocurrency in it now too, but anyway, but that's why we as professionals protect ourselves, which is as a taxpayer, you need to disclose this stuff, because how can we help you if you don't? Because as the summonses coming out, and I think even some of these places like Coinbase are even asking for things like social security numbers, those kind of deals now before you can cash out.
Yep.
There-
No, no, it's, I suspect, I guess it'll probably become more mainstream where they'll be doing reporting to the government on it.
Yeah. So as we look ahead going into 2022, what should taxpayers and even professionals be looking at, knowing that the IRS is really going to be start chasing this, whether it be, as you mentioned earlier, the payroll taxes or even just general income taxes? What should action should be taken now or as soon as possible?
Well, if you do have a tax issue, I would be proactive and try to get out ahead of it and deal with it before the government comes. The problem with the automated enforcement, on the one hand, it's cheap for the government, right? The computers run it. They'll hit the bank accounts, they'll levy, they'll whatever. Getting that stuff undone can be very difficult. So it's a lot better off if you can get in and get ahead of that. If you're a non-filer, get your returns prepared, right? In order to be in compliance, you only have to do the last 6 years. So 15 through 20, or pretty soon 16 through 21, will get you into compliance. All of the states, almost every state has a voluntary disclosure program. So like Connecticut, they just changed it, made it worse. It used to be you could come in and just do the last 3 past due years. Now it could be 3 to 6 years, depending. Same with New York, could be 3 to 6 years. New Jersey is 6 years. Mass, 7 if you're a resident, 3 if you're a non-resident. So but the point is, if you haven't filed in 10 years, you probably don't have to file 10 years of returns. So see a professional, get the returns prepared. You may have to reconstruct records. You might have to use estimates, which are allowed, and get those missing returns in and deal with the problem.
Yeah. Now, some of the states, it sounds like some of the states have varying degrees. The IRS talk about 6 years, but so some states will vary from 3 to 6, depending on the state and circumstances.
Yep. No, every state has their own. And I don't know, but my understanding is, someone told me literally yesterday, California, there's no limit to look back. They want everything all the way back.
Well, actually, I tend to accept that because I have a client right now who's, of course, I'm waiting on him because he's supposed to give me some information. But anyway, they have like a lien from a 2013 return from California. So we got to go back to 13 and to fix that for him. And so yeah, some states, California, and then others, who know? I mean, I'm not even sure what Colorado's has, come to think of it. Of course, I've never had anybody have to file. I've had a pretty good clientele, so I've always kept everybody pretty current over within the last 3 years. So I've never had to go back too far in Colorado. So I guess that's why I've never studied it too much then, because I haven't had to, which is actually a good thing, I guess, the way to look at it. But certainly it's very, very important to keep that up. So as we look at collections and enforcement again, what does it take for something to really, I think you mentioned some of it, but what does it really take for something to go from like collections to actually criminal to the officer with the badge and a gun coming in and seeing you? Because that's what I've always told clients. Don't worry about people walking in unless they're someone with a badge and a gun. Then you're in trouble with the IRS.
Well, generally speaking, it's it has to be something criminal. Right. So it's usually you submitted a false financial. So a 433 where you don't disclose everything, like the virtual currency or the foreign assets. It could be a non-filer that after many attempts from the IRS to get returns, they decide to make it criminal. Usually they don't just knee jerk to criminal. it's usually they have made a number of attempts to get the taxpayer to comply and the tax, because what they need to show is that it's clearly willful. You know, the fact that someone hasn't filed, what if they have medical issues? What if, I mean, you know, there are reasons why people may not do that. So the IRS doesn't just knee jerk to, you haven't filed for 4 years, it's obviously criminal. That it's not. They'll make an attempt to have someone contact the taxpayer, get the returns. But one thing is, if you have to clean up issues, you've either filed returns that are not completely on the up and up, or you've left off things and you need to clean that stuff up, consider voluntary disclosure with the IRS. The IRS does have a very robust voluntary disclosure program where you can avoid the worst of the civil fraud penalties and get into the system and clean that stuff up so you can sleep at night.
Yeah, the voluntary disclosure, I have done that at least one time with a client in regards to payroll taxes. And it made it actually real. It went through. I was amazed at how simply it went through. We just filled it all out because it was actually a result of a state doing a employee reclassification. But when we did, I says, well, the state did it here, so we got to do it with the IRS too. But guess what? The IRS has this available. And so we just filled it all out, paid the amount, never heard from them.
Yeah, the IRS is a little more, they're trying to formalize it more. And so here you go through pre-clearance, because what if you're already under investigation? You may not want to disclose some of this stuff. So you go through pre-clearance, then you get approved, you go in. Now you agree to a 75% civil fraud penalty on the biggest year, but that's still a big break. And the rationale is, unless you have criminal exposure, they don't want you in the voluntary disclosure program. But if you are somebody who has undocumented workers, employees off the books, you can't just file 941s. These people don't have ID numbers. I mean, how do you do W-2s, W-3s? Voluntary disclosure, as you discovered, allows you to just clean all that up. You can come in and say, look, we know roughly what we paid, we know, and you can use estimates. And I've done the same thing. Had an auditor, they'll look at it. We give them the rationale, how we came up with it. They'll look at what we have. They know that you're here. They know you don't have great records. And I find these things generally go through a lot faster and easier than us guessing, filing returns and hope they don't get audited. You know, so it's no voluntary disclosure. I think for anyone listening, the big thing I would say, 2022 should be a great year to clean things up. If you have back balances, get out ahead of it. If you haven't filed, get in and get filed. Consider voluntary disclosure. And also get to a professional early, because some serious decisions need to be made. Should you do married filing joint or married filing separate? That depends on what the collection alternative is. What does the collection look like? You might be better off married filing separate, even though, let's say, the husband gets stuck with a much bigger balance. But from a collection perspective, the assets are in the wife's name. Are you in a community property state or a separate property state? So this stuff gets kind of complicated. And so it's almost more important to meet with the professional, walk through, see what your options are, and then come up with a plan and execute the plan.
Yeah, and that's what I try to encourage through this program is, hey, get this stuff taken care of. Don't rely on just software to do it for you. Don't rely on the advice of your neighbor or the guy next door or the mechanic over there who's out giving tax advice to you, but actually get into a professional, come into someone like myself, an enrolled agent, so that we can help you walk through these steps. Because if you're behind a few years, you just made me think of another possibility with your example of how, depending on the year, you could have 3-4 years of back taxes. A married couple, they just haven't filed for whatever reason. Anyway, maybe married filing joint each year isn't the best choice for them.
Right.
I mean, because they haven't filed, they can still do a married filing separate return, maybe in a year, one of those years or something. So just depends on the circumstances. You just can't jump on it and go.
No, do not just knee jerk married filing joint. And what's funny is that people always ask me, well, don't you think if we always did joint and now we do separate, that's going to look weird? No, no. In fact, honestly, for those of you listening, the actual normal filing status is separate. You elect to go joint. All right. So the fact is, do I worry about the IRS will look, askance at the fact that we suddenly did married filing separate in 19 and 20? Yeah, no, maybe they do, but who cares? It's not our problem. It's their problem. Right. We're entitled to do it. But you want to think those things through, because once you file joint, you cannot amend to go separate.
Yes,
once you file joint, you're stuck. And so the only way out is innocent spouse. And I will assure you, innocent spouse is not simple to get.
No, it's not. I've had to do a couple of those cases, and it was definitely a challenge to walk through that with the taxpayer, and then of course with the IRS. I got them done, but it did take some time to get it done there. We certainly, all these different cases. These are areas where you want to avoid and where you don't want to have someone you work for do the tax return either. Because I've had those circumstances come up, and I went back and looked at it. I'm like, well, this is why we're having to file this innocent spouse claim, is because of how this other person did this tax return. And people just make conclusions. And I always tell people, don't draw conclusions from what people say they can do just because they know your business or whatever. They may know your business, but it doesn't mean they know how to do the tax return. So,
right, exactly.
So that's what I'm just so wild and crazy about with this. But hey, Eric, I really appreciate this wonderful conversation. They've been very insightful for myself and for those listening to this podcast, because there's just so much that people just don't know and they really need to know. And yes, the IRS is just going to get it. If you haven't paid your payroll taxes, that's what I always tell people. If you don't pay anything else, pay your payroll tax. That because they're going to come for you if you don't.
And here's the other thing, I guess, is a final thought. If you can't pay your payroll tax, if you can't pay the sales tax, there's something wrong with your business. Your model is not working. And that's when, you go sit down with, you, Marcelino, sit down and get help. What is going on with my business? The bigger issue, and I think when you were on my podcast, we talked about this. Most taxpayers don't understand how to utilize their tax professional. They figure I'll show up in April, they do my return. Well, okay, if that's all you want, but the real benefit is, to sit down with you. Now it's a little bit too late, but a month or two ago and say, where are we? Look at everything. Is there any last minute moves I can make? In April, it's a postmortem.
Yeah.
So now it's, you really want to actually make the best use of your tax professional during the year when they can really give you advice.
Yeah, definitely. So if anybody happens to need your services here, Eric, how do they get a hold of you?
I'm pretty easy to find if you Google Eric Green and Tax, but the law firm is Green Sklarz LLC. It's gs-lawfirm.com. Obviously, Tax Rep LLC is Tax Rep Network. That's the podcast and the coaching program. I'm a pretty easy guy to find online. I'm on all the major social media.
Yeah.
Stuff, LinkedIn, Facebook, that.
Yeah. And so, yeah, definitely, Eric. We certainly appreciate, again, your insights into IRS enforcements and collections, where it's heading, and then as well as what taxpayers need to do and the importance of being proactive and then coming to see me, the enrolled agent, before they need to go see you. Not to say I want to keep business from you, but in a way I do want to keep business from you by helping people not to have to need it.
I couldn't agree more.
So if any have any questions or you want to visit with me sometime, give me, Marcelino Dodge, a call. It's 844-394-4287. Schedule your mutual exploration session so we can set up a tax plan for you and help you to avoid IRS collections and enforcement. That's cashtracksfinancial.com, or of course the email success@cashtracksfinancial.com. Thanks so much for listening today to the Tax Answers Advisor with Marcelino Dodge, Enrolled Agent, on the Voice America Business Channel.